Good afternoon, everybody. This is yet another beautiful, warm afternoon. I would like us to look at the remaining part of our retirement series. The first two series covered how pension helps us create in a retirement income, and how it also helps us handle or take care of our interests during retirement. Personally, I want to let me introduce myself. My name is Ayuna Finwa, a retired insurance professional, but not tired. I have about over 35 years experience, having worked in the retirement sector and banking sector for a period of 35 or 36 to 37 years. And during this period, I accumulated quite a bit of experience, which I feel would be useful in helping our people prepare better for retirement, and also plan for it so that retirement becomes as stress-free as possible, and it should be, or you make it an exciting period as much as possible. Like I mentioned, I'm retired, and I'm happy, and I can tell you this is one of the best moments, especially if you are not stressed, and whatever it is that you have to do, you do it at your pace and you plan how to do it. The last 3 sessions, or the last 2 sessions, were on how we handle pension to take care of our retirement income, and also how the second one was on how pension helps us take care of our interests during retirement. The last of the 3 series today, I want us to look at how pension helps prevent predation of our retirement income during retirement. And if you allow me, I'm going to share a very short, to share my screen to do a short presentation. Just a second. Yes, there we have. This is how pension protects you from predation. And I want us to look at the first part, what has driven us, the main force behind my thinking and taking the initiative to handle or to make this presentation is to facilitate Kenyans and to encourage Kenyans from an early age to get interested and prioritize savings towards security of your retirement period. This is because when we start earning, most of us at an age of about 25 years, then we retire at an age of 50 to 60 years. And you can see we only have a period of 25 to 30 years to put this, to put the future life in order. And unfortunately, it is not visible. When you are 25, it is very difficult to see and to imagine your 60 year, how it will be. In fact, like we saw in the previous presentations, one of the questions that most of us ask when we talk about thinking about saving for retirement from an early age, they ask, who told you that I will work until retirement? And the answer to this was, we don't know. We do not know who will work until 45, who will work until 50, who will work until 60. And even after working until 60, we don't know who will live until age 80 or age 90 or even 100 years. But it is a guarantee that that time will surely come. It will come because it came for me. I started when I was working when I was 24, 25 years. And here I am, above 60, but even the 60 years caught me still working, and now I'm living even after retirement. So those 30 years are not many, especially because they are years of accumulation. And in most cases, we accumulate and we decumulate. We accumulate, and when we change our jobs, we access our funds and we go back to the drawing board. So it is very possible for you to find yourself having worked for so many years, but all what you have accumulated during the in the form of retirement savings, if any, you access it at any moment when you change your employment. And that is where the danger is, that we eat, we consume what we have put aside for retirement or what has been put aside until the government has to come up with a law, the Retirement Benefits Act, which prevents access of at least 50% of employers' contribution. That is only if you are participating in an occupational scheme. But we said retirement is a factor of age. Whether you are employed in a structured employment or not, it will come. So when you do not have an employer who is facilitating saving for retirement or you to save for retirement, it is important that you know now, because you are self-employed, you are the employer and you have to facilitate the retirement of the employee, who is again yourself. So indeed, it is important that we emphasize it's good. Even when our children are young, we learn to encourage them to develop the culture of saving so that even when they start working and earning a living, it will not be difficult to put aside something for the rainy day or for the future date. Indeed, protection of your retirement is easy from access by other parties. It needs to be protected, because it is very easy for other parties to access it. And this is of utmost importance. We are going to look at one major slide here that is answering the question, what is predation and how does pension prevent it? We define a predator. A predator is an organism which eats others. And this implies when you get your retirement funds in lump sum, it is very easy to become a victim. So this predator does not have to be a human being. It can be when you get your retirement funds and you are paid your 5 or 6 or 7 or even 10 or 20 or 40 million. There are many things that will crop up. That is the time you feel, I have always wanted to purchase a particular item or property, or you have always wanted to donate a good gift to somebody and you have never been able to do it, and you think this is the right time to do it because you have funds which are available. The other major risk that comes up is that when this money is availed to you as a lump sum, it is a new phenomenon. It is something that has not been happening to you. In a working life, we know we are paid after working for a full month, and you are only paid 1 month's salary. We do not have an experience where you are paid 1 year's salary in January. And even if that was to happen, and I think you will all agree with me, you will find that money will not run beyond the month of June. Most of it actually get exhausted in the 3rd month. So receiving retirement benefits as a pension or as an annuity or as a monthly or a periodic installment prevents this from happening to you. So how does it prevent this from happening to you? One, it ensures that these lump sum funds that you get, you surrender the money to a life office. And even if you have some needs that require lump sum cash handling, isolate those needs and put aside the money that is required to take care of those needs. For example, you may have been paying for a house mortgage, and by the time you left employment, or by the time you attained retirement age, your mortgage had not been run to the end. You had not exhausted repayments. So you still have repayments, and when you retire, it will not be possible, or it will be difficult to put aside funds to pay for that mortgage, and you'd want to clear it. Set aside funds that you need to do that, because it is for a specific, important thing, so that by the time during your retirement, you will not need to, you will do away with the monthly rent repayment or mortgage repayment. So the life office ensures that these benefits are paid to you and to your bank account, and it is paid in amounts that you require for recurrent and routine expenses. Recurrent and routine expenses are expenses that repeat themselves, whether you are drawing a salary or not, whether you are employed or not, whether you are sick or not. These are expenses like your food bills, expenses that you need to run your house, to run your kitchen, to run your home. Expenses like the power bills, electricity bills, they come on a monthly basis. Your water bills, they come on a monthly basis. Two, the life office ensures that these benefits are actually paid to you as they make sure that the benefits are paid to you. The scheme setup, or the retirement scheme setup, is actually well protected. And the annuity benefits, or these benefits, cannot be subjected to litigation or assignment. For example, you cannot have a financier attaching your pension funds. You cannot have somebody who had lent you money going to the life office and demanding to be paid your money because you have their debts. You cannot, even the court cannot attach your pension funds. So this is a very well protected fund, because the government is also interested in taking care of the old employee or the older person, and to make sure that his needs are met, his food is available, and his medical expenses are taken care of, all those expenses that would make that person otherwise uncomfortable. So they are not available and you cannot assign those benefits to anybody. You have to receive those benefits yourself. It is only the annuity payment that is protected in that manner. 3, funds are only paid to the annuitant, and that is to you who has retired as long as you live. The pension is usually guaranteed. It has a guarantee period, maybe 5 years, 10 years, 15 or 20 years, or even longer, as you may agree with the life office. So what happens is that during the guarantee period, when you notice that the lump sum amount that you paid to the life office actually technically gets exhausted. But the life office has gotten into a contract or into an agreement with you that they will pay your pension or your retirement income during the guarantee period and life thereafter. And that is why we are saying the funds are paid to the annuitant as long as he lives. So that is a very secure element. And this is something that cannot be taken for granted, because like we brought out a question which most people will ask: who tells you I'll work until retirement? But nobody even knows, and nobody knows how long we will live after retirement. And remember, after retirement, the regular income that you used to draw in form of a salary will not be there. So it is only this annuity that will be available, and this is what you will live on. And we said retirement will surely come. And the Bible in Numbers chapter 8, verse 24 to 25, Moses was guided by God, and he was told the Levites must retire on attainment of age 50. After that, even if they go to the temple to serve, they cannot go do it alone. They will need to do it in the company of a younger Levite. So during retirement, when you attain retirement age, you should rest, and a younger person takes over what you were doing. But remember, you have rested with your needs. You have rested with your stomach to feed. You have rested with your home to run. You have rested even with a child who was going through school still have to go through school. So what happens to those needs? And that is the question that each one of us must have an answer to. Very quietly, but you answer that question when you are 25, so that you have a period of 25 to 30 years to answer that question and make sure that there is available a saving or an asset that can be utilized to support your future life. So we are not saying that you cannot help people. We are not saying that you cannot support needy relatives. We are saying you can and you will, but that should be a deliberate action. It is something that you should plan to do and allocate resources for it. And therefore, when your annuity or pension earning is paid to you, it is from that point, before you draw it from your bank account, you first of all set aside funds that you need for your recurrent expenditure. And then after that, you will see what is you have to spare that you can use on the other needy people around you. And with that, I think I would say we have done justice to that topic. And the last slide, we have 3 ways that you can contact holistic through email. If you click here, even on your email, on your email, you straight away go to a box that will allow you to do an email to us and put across your question or your concern or the clarification that you need. If you need a detailed personal attention to your question or a presentation, you simply come here and book a session. I just demonstrate this. When you click that, it will give you a form that you complete, and it tells you, thank you for showing interest in our products. You put your email address through which we can reach you, mobile telephone number through which we can contact you. Sorry. Then the date and time that you are available, so that we'll be able to exclusively have quality time with you and respond to all your questions. You can also choose here, there's a drop down. You can choose whether the question that you have is relating to insurance, to investment, to retirement, or any other, or any of the 2 or 3 of them. You can just record them down there. And then after you have done that, you click the submit button and the document will be submitted, and we'll access it and do the necessary. You can also chat us up on WhatsApp by just clicking this box. If you click that, it will take you to a platform where you are able to chat with us on WhatsApp. And with that, I think we have done this subject justice, and we look forward to meeting you. And it is my prayer that God will protect you and keep you, and also help you make the wise decisions, and especially decision to put aside something for your retirement. And we'll be more than glad to facilitate the placement, whether it is an insurance program or whether it is a retirement program or investment program. We will gladly do that and help you place your funds with a strong and reputable institution, so that the benefits will be available as and when you will need it. And with that, thank you very much and be blessed. And I'm happy to end that presentation. At that point, we meet as we deal with specific questions. Thank you, and God bless you.